Today, Bitcoin jumps back above $28,000 as investors shrug off regulatory crackdowns. The FDIC gives signature banks' crypto clients a deadline to close their accounts. And Sergey Nazarov of Chainlink weighs in on sentiment among blockchain developers. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices rocketing higher this morning in yet another rally for the market. By noon Eastern, Bitcoin surged beyond the $28,000 level as investors seem to be shaking off worries surrounding a regulatory crackdown here in the U.S. after the CFTC sued Binance for allegedly violating trading rules. At the same time, Ether climbed to $1,800 and Solana soared to $21. Now, investors might be pouring into those assets, but a report from Nansen also showed investors withdrew $1.6 billion worth of crypto from Binance since the exchange was sued by the regulator earlier this week. Yesterday, the blockchain data tracker tweeted that Binance experienced a net outflow of about $852 million in crypto in 24 hours. All right, sticking with Binance for our top story, the Financial Times is reporting that Binance allegedly had extensive ties to China for several years, and that company documents show the exchange relied on the region long after it said it had left amid a crackdown on the industry in late 2017. The article alleges that the firm's CEO, Changpeng Zhao, and other company execs reportedly told employees to hide the exchange's Chinese presence, which included an office that was in use until at least the end of 2019, and one Chinese bank that was used to pay some salaries. These latest claims come after a report last week here at CNBC that Binance employees helped Chinese customers bypass the national ban on crypto. We reached out to Binance for comment on the Financial Times report, but didn't hear back right away. Next, the SEC just sued yet another crypto company in its latest wave of enforcement action. The new suit, which was announced this morning, targets BXC Digital and several executives of the crypto trading platform for failing to register as an exchange, clearing agency, and broker. The SEC argued that the company's founder and his firm raised $8 million in an unregistered offering of the BXC token. The SEC also alleged that the firm's founder misappropriated at least $900,000 for personal use. We reached out to BXC, and a spokesperson told us the firm is looking forward to continuing the development of crypto and blockchain technologies within regulated and compliant markets. Last, the FDIC confirmed to us that the agency told Signature Bank's crypto clients they have until April 5th to close their accounts and withdraw their money. An FDIC spokesperson told us that after that date, the agency will mail a check for these deposits to their owners. On March 19th, Flagstar entered an agreement with U.S. regulators to buy deposits and loans from Signature Bank. That deal meant Flagstar Bank assumed substantially all of Signature's deposits, some of its loan portfolios, and all 40 branches. But Signature's crypto business was left out of that deal. All right, on to our main story. It's no secret that crypto investors have been shaken as markets have tanked. But what about developers? Well, Crypto World's Mackenzie Segallo spoke with Sergey Nazarov, the co-founder of Chainlink, to find out how developers feel in this current crypto environment.
So let's start with all this uncertainty in the crypto space right now. Everything from banks being wiped out to a lot of regulatory pressures. How does this ripple into the sentiment among developers? We talk a lot about it in the context of investors, but I'm very interested in what the vibe is among this Web3 programmer crew.
I think for developers, it's very positive because people are starting to realize that true ownership and control over assets and that counterparty risk in traditional institutions is a real problem. And people turn to technology to solve their problems, and developers build the tools and systems and applications that people use to have those problems solved. So developers are often looking for, what is the problem that I want to solve? And people losing faith or having a crisis of faith about traditional financial systems, traditional financial institutions, and their relationship with those institutions, because a 100-plus-year-old institution can, basically go out of business or put your deposits at risk. That's a new and exciting problem for developers to build around. And so I'm seeing even more interest the more there are these failures, because people are starting to realize the unique properties of cryptocurrencies and blockchains and smart contracts in solving these problems in a way that no other infrastructure can solve.
But there are some headwinds that come with this kind of uncertainty in the overall space. One, there's less capital going around to fund some of these projects. And then two, you've got a lot of developers who are now concerned for their own personal safety as, there's this uptick and certain developers facing, legal backlash for the work that they're doing. Does that ripple into the sentiment at all from what you're seeing?
I think that the right way to think about the crypto industry is kind of like the crypto Wild West. There are risks and there are opportunities. And people need to measure their opportunities and their risks very carefully. If you start doing things that have serious security risks, serious legal risks, serious other risks without consulting the proper professionals, without weighing those risks, then you're taking risk. But this is what it is really in every new industry where something exciting is happening. In the early days of the internet, before anything was clear about how anything was regulated, or how anything works, or how anything functioned, people went after opportunities, they took risks, and some of those risks panned out, some of them didn't. And at the end of the day, I think that developers and startup folks play this important role in society where they're able to measure these risks and opportunities in ways that create innovations. Innovations like Uber, for example, right? Uber was in question at some point of whether it was working properly, whether it was compliant, whether this, whether that. And we Uber places all the time, constantly, right? So I think that's the type of thing where obviously there are risks in areas where things are not clear, but there is also opportunity. And everyone should weigh those risks with the help of professional advice and go after the opportunities that they feel comfortable taking on. But the opportunities abound. And that's the thing that drives the global economy forward and the global startup community forward. It's the opportunity.
And with respect to your platform, what does adoption look like? What does activity look like on platform?
So it's been very positive. So far, the platform has enabled over 7 trillion in transaction value, which is a very large number across any infrastructure. And that has mainly been driven by DeFi, but I expect it to continue to be driven by DeFi, gaming, and capital markets, basically funneling value into blockchains. So right now it's at over 7 trillion in total transaction value enabled. I feel it's going to go well beyond that, and that's going to be driven by interest in using blockchains in financial products, gaming, and the capital markets.
So you announced a new partnership with PwC. Tell me more about that.
So that's very exciting because we're seeing a lot of enterprise and capital markets interest in integrating with blockchains and integrating with cryptocurrency systems, which is what we specialize in our work on Chainlink. It's literally in the name, Chainlink. We connect these systems to various blockchains very efficiently. So the partnership with PwC is one of the early ones, one of the ones that we're going to focus a lot on, that is going to scale up that interaction with capital markets and enterprises by allowing PwC to basically help them implement this efficient way of interacting with blockchains, which is what Chainlink does. And I think you're going to be seeing more and more of that because I've been speaking with the capital markets CEOs and various other folks for years, and I'm seeing a renewed level of interest that has less to do with speculation and much more to do with the value of the technology.
I just think right now you lost Signet, you lost Sen. These were two major on-ramps. And so you do see liquidity falling out, but you're not at all concerned about how that affects your business model, or that hasn't shown up in the numbers yet for your platform?
I mean, I've been in this industry for over 10 years. You know how many times some bank somewhere decided not to service some crypto customer and people got worried? In the early days of Coinbase, this was a recurring pattern again and again. They would lose a banking partner, they would gain a banking partner. And everyone would run around and ask themselves what it means. At the end of the day, it's another one of those speed bumps. The opportunity is there. People want control over their assets. People want control over their financial life. And it's a global market. So if someone's not willing to service them, then someone else will service them. It's just going to take a couple of months.
Yeah, who is that replacement? I'm so curious because it seems like these two payment networks were quite unique and they had been around for years. So finding someone to, settle a lot of these transactions outside of banking hours doesn't seem as though it's going to be the easiest thing to find a replacement for.
I've seen a lot of interesting things coming out of Singapore, and some of the innovation there with the banks there. They've been heavily starting to focus on possibly providing these alternatives. I think Hong Kong is looking at becoming a crypto hub. I think I've seen some movement there, and other jurisdictions that have banking systems access, have AML KYC requirements, have a robust banking sector. So at the end of the day, it's not a matter of what happens with any one bank or what happens with any one even geographically focused collection of banks. What matters is whether there's an opportunity. and whether banks see a market. And banking is a global business. And so if one category of banks doesn't want to service that business, then another one will. And that's what historically has happened again and again. It'll take a couple of months, it'll take some time, and that'll create some delay. But at the end of the day, everybody runs on capitalism. Capitalism is very simple. What's the opportunity? And if they're not going to take it, we're going to take it. And that's it. So as long as the opportunity is there, where there's a will, there's a way.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.